The latest coronavirus variant, Omicron, sent crude oil prices downward, with WTI crashing nearly 6% at one point on Monday, and Brent sinking by nearly 5%. The news surrounding Omicron has instilled a certain fear in the market that it could unleash a new level of demand destruction, stemming from fresh lockdown measures taken to curb the spread. Those stricter measures to slow the spread have already begun in some countries. The Netherlands implemented new strict lockdowns this week, with bars, restaurants, and non-essential shops ordered shut until mid-January. In addition to that, households can only host 4 guests over the holidays. Prime Minister Mark Rutte said that restrictions were unavoidable. The United Kingdom mulled tighter coronavirus measures to slow the spread of Omicron if needed, with Prime Minister Boris Johnson saying that he would not rule out another lockdown. Germany will ban travelers from the UK starting this week, and Ireland has instituted an 8 p.m. curfew for bars, restaurants, and live events. Americans in general have lost their appetite for widespread lockdowns, but New York City is considering a cancellation of its New Year's party in Times Square. Omicron may prompt other countries to employ further restrictions. These lockdowns, and more importantly the threat of possible future lockdowns, are spooking the crude oil markets, which was counting on oil demand having a muted response to Omicron. The IEA said that the surge in COVID cases was set to temporarily slow the recovery in global oil demand, but the impact of the Omicron variant would likely be more muted than previous waves and wouldn't upend the current demand recovery. The market this week, however, is signaling that Omicron may elicit a more severe response.